everyone, and welcome back to the deep dive. Today we're tackling something that, let's be honest, might sound a bit dry at first, American tariffs. But it's actually pretty fascinating stuff. We're really going to dig into why a country would, well, intentionally make things its own people buy more expensive. Our goal here is to cut through all the jargon, get to the heart of what these tariffs are, how they actually work, and, why they matter to all of us. Even if you're not deep into economic policy, you've sent over some great source material, and we're aiming to pull out those key aha moments for you.
Exactly. And it's important to remember this isn't just some simple tax. If you zoom out a bit, you'd see it's really a tool, a powerful one, actually, in global trade economic strategy. And it really shows how decisions made, at the border can ripple out and affect everyday life, sometimes pretty quickly.
Okay, so when we say American tariffs, what are we really talking about? Is it just like a tax slapped on imports, or is there more going on?
Well, it definitely is a tax, yes. But you're right, its purpose and the way it works are a bit more complex than your average sales tax. Basically, the materials we looked at define it as a duty, a tax, that the U.S. government puts on goods coming into the country from other places.
Right. So let's picture this. Maybe you own a clothing store, say, in New York, and you've just ordered a shipment of really nice jackets from Italy. That purchase, that import, that's kind of the starting point, right?
Precisely. And the moment those jackets hit, a U.S. port, could be by ship, plane, whatever, that's when U.S. Customs and Border Protection, CBP, gets involved. They'll inspect the shipment, and the importer, your store owner, has to file a bunch of paperwork. They need to declare exactly what's in the boxes and what its value is. It's a really critical step.
Okay, and that leads to the big question. How do they figure out how much tax to charge? I thought it was interesting that the rate isn't just, pulled out of thin air.
Oh, definitely not. It's very structured. The actual duty rate depends heavily on the specific product, like is it a cotton jacket or a leather one, and where it came from. Italy, in this case. All these rates are laid out in this huge detailed document called the Harmonized Tariff Schedule of the United States. The HTS-US businesses spend a lot of time and money making sure they classify things correctly in that schedule, because getting it wrong can really change the cost. So for those Italian jackets, let's say the shipment was worth $50,000. If there's a 10% tariff on them, then the importer owes $5,000.
And what really jumped out at me from the sources here is when that payment is due, it's not like a bill you get later. That payment, that $5,000, has to be paid before those jackets can even leave the port and head to the store. The importer, or usually their customs broker, pays it up front, and for you, shopping later. That extra cost almost always gets baked into the final price tag, makes the imported stuff more expensive.
Yeah, that's the direct impact. And it's not always the same kind of tariff either. When you dig into the types, you see some differences.
Yeah.
The most common one is called ad valorem.
Yeah.
That's just a percentage of the item's value, like our 10% example. Then there's specific tariffs. That's a fixed amount per unit maybe, say 50 cents per pound of cheese, something like that. And sometimes you see mixed tariffs, which kind of combine both methods. Gives them more flexibility, I suppose.
Okay, so given how organized this whole process is, it really makes you ask, why? What's the strategy behind the U.S. using these tariffs? The materials we reviewed seem to point to a few main reasons. The first one seems to be about protecting local industries.
Exactly. That's a big one. So if U.S. companies making jackets are finding it hard to compete with cheaper imports, like those Italian ones, a tariff makes the imported jackets more expensive. The idea, the theory anyway, is that this levels the playing field a bit, makes the American-made jackets look more attractive price-wise, hopefully helping those local businesses.
Right. And then a second reason that came up is using tariffs as a way to pressure other countries.
Like using them as economic leverage, maybe to get another country to change its trade rules. Perhaps they have unfair subsidies, or maybe the U.S. wants them to open up their markets more to American products. It's like diplomacy using economics instead of, well, other means.
That's a good way to put it. It can be a tool in international negotiations. And the third reason is, honestly, pretty simple. Raising money for the government. The cash collected from these tariffs goes right into the U.S. Treasury, becomes part of the federal budget.
This also brings us to how trade disputes or even trade wars can start. And that's where things can get really messy fast. The sources gave a really clear example. Imagine the U.S. puts that tariff on the Italian jackets we talked about.
Right.
So Italy sees its jacket sales drop. They're not happy. They might decide to hit back. So maybe Italy then puts its own tariff on something very American, like California wine, right? Retaliation. And suddenly those U.S. wineries find it much harder to sell their wine in Italy, because then the price just shot up over there thanks to the new Italian tariff. And you can see how this could spiral. The U.S. might react again. Italy reacts back.
Right.
You end up in this cycle where both countries keep adding tariffs on different goods, and the result, things just get more expensive for everyone involved. It ends up hurting businesses, maybe farmers if agricultural goods get targeted, and definitely consumers in both countries.
So let's try and pull this together. What's the core takeaway from this deep dive? We've seen American tariffs basically act as a specific kind of tax on goods coming into the U.S., making them more expensive. We walked through how it works from the goods arriving, the customs checks, figuring out the tax using things like the HTSUS, and that crucial upfront payment. And we've got a better handle on why the strategic goals, like protecting U.S. industries, putting pressure on other countries, or just plain old revenue. And that example, that the Italian jackets leading to tariffs on American wine, it really shows how these things can hike up prices for you and ignite these damaging trade fights.
That really captures it. And looking at the bigger picture, it's clear that while tariffs might offer some short-term help or protection for certain domestic industries, their long-term effects can be, well, really complicated and spread out much wider. They end up impacting businesses, farmers, workers, consumers, really, in all the countries drawn into it, not just the one imposing the tariff initially. Understanding how these mechanisms work is just super important for making sense of the global economy we all operate in.
Definitely. So thinking about what this means for you, maybe the next time you hear about trade deals or tariffs in the news, here's a final thought to consider, something that came up in the sources. People often use the terms tariffs and customs duties like they're exactly the same thing. And they're related, sure, but there's a subtle difference. Tariffs, as we've discussed, are usually put in place specifically to influence trade, maybe protect domestic industries, maybe as leverage. There's a clear policy goal there. Customs duties, though, can sometimes be a broader category. They can include tariffs, but might also include other fees or taxes collected at the border, maybe just for revenue or for general regulation without that specific trade protection or pressure angle. It's a small distinction, maybe, but understanding it helps you see the different ways governments use these border taxes and, well, adds another layer to understanding how global trade really functions. Something to think about.